We are always using exponential moving averages for strategy backtests. But is the EMA the best moving average out there? Or we could have been using a better one all this time? In today's video, that's what we are going to answer. Hello everyone, and welcome back to TradeSmart. Let's get right into it. If you want to get a basic trading script to test these moving averages by yourself, watch the video until the end, as I will show you how you can get a TradingView script for this strategy. As I was doing my research on different moving averages, I found that there is no YouTube video that covers more than 2 moving averages. So, I decided to take the most popular moving averages and compare them to see which yields the most profit. I took the 9 most commonly used moving average and tested every one of them using a simple strategy. One of the most basic trading strategies is the moving average crossover. The strategy is very simple. When a fast moving average, let's say the 25 length EMA, crosses above the slow moving average, let's say the 50 length EMA, we enter into a long position, and vice versa. If a cross to the downside happens, we enter into a short position. To make the competition fair, I used the same rules for the strategy on each backtest. First, I will show you the chart setup and the rules of the strategy. Then I will show you the backtests and the results. After that, I will show you the trading script in which you can test all of the moving averages with a few clicks. As the trading script is very easy to use, I managed to backtest 150,000 trades on different timeframes, assets with different risk bases and risk-to-reward ratios. At the end of the video, I will show you these results and share the Excel sheet with you. And now, let's see the chart setup and the rules of the strategy. I will use the EMA to demonstrate the strategy, so set up 2 EMAs. Set the first one to a 25 length and set its color to red. Now click on the second EMA and set its length to 50 and color it to yellow. We need one more entry and exit level indicator, and if you have been a follower of TradeSmart for a long time, you should be familiar with this one. We are going to use the NNFX ATR indicator. Once you have it on your chart, go to the settings and untick every line except the stop loss levels. Set the stop loss line value to 2 and set its line side to step line. If you've done that correctly, your chart should be looking something like this. Now let's go over the rules of the strategy. As I said, the rules of the strategy is very simple. For a long position, wait until the 25 length EMA crosses above the 50 length EMA. Once the candle closed, we enter into a long position. Set your stop loss to the lower NNFX ATR line and the take profit to the upper NNFX ATR line. For a short position, you do exactly the opposite. We wait until the 25 length EMA crosses under the 50 length EMA. Once the candle closed, we enter into a short position. Stop loss goes to the upper NNFX ATR line and the take profit goes to the lower NNFX ATR line. This way, we get a 1-to-1 risk-to-reward ratio. This will give a fair chance for each moving average to show if they can give us an edge over the market. I hope everything's clear. If you have any questions, don't hesitate to ask me down in the comment section. For the backtest, I choose the Bitcoin USDT 1-hour time frame. I wanted to see how these moving averages perform in different market conditions, so I took a look on the daily time frame and started looking for a sideways price action period, a bullish period and a bearish period. I choose this time interval. Here we have first a sideways period, then a bullish period and finally a bearish period. To make the moving average comparison as fair as possible, I am going to test all the 9 moving averages on the same time interval. With that said, now let's see all the 9 backtests, and then I will show you the trading script and for advanced traders, the results of the 150,000 backtests. And the results are in. If you find my content valuable, like, subscribe and turn on the notification bell so you won't miss any of my upcoming videos. For premium trading scripts, strategy optimizations and Discord membership, check out our Patreon. After backtesting all the 9 moving averages with the same rules on the same asset, time frame, time interval and with the same MA length, the third best moving average is the WMA or the weighted moving average with 18% gain on the account. The second best one is the EMA or the exponential moving average with 14% gain on the account. And the first place winner is the SMMA or the smoothed moving average with 16% gain on the account. You might wonder now, how the WMA is the third place winner with 18% gain on the account, while the SMMA is the first with only 16% gain on the account. That's because as we tested all the moving averages on the same time interval, we got different number of total trades. So to solve this problem, I projected the net profit to 100 trades. This way we have a fair comparison of the results. By the way, profit factor is also a good tool to compare the results in a fair way. One interesting fact that the simple moving average, which one of if not the most used moving average, took the 6th place out of the 9, which is not great at all. In my opinion, the SMMA performed so well because as it's a smooth moving average, it can avoid short-term swings in the markets. Usually these short-term swings cause most of the fake entry signals, giving us losing trades. Now let me show you the TradingView script we made for this backtest. We released 2 versions of this script. The first one is an indicator script and it's absolutely free to use. This one shows you all the long and short entries and you can customize the stop loss and take profit levels also. But it won't show the results. The premium version of this script is a fully customizable trading script. With this one you can get backtesting results instantly with a few clicks. This script is very useful to compare different assets and timeframes, risk-reward ratios to find the best performing ones. We had to make this an invite-only script because TradingView wouldn't let us publish this script. So if you want to get access to the free version, the only thing you need to do is to type your TradingView name down in the comment section. This way we can add you to the script within 24 hours and you will see the multi-MA crossover script popping up in the invite-only section. And now, let's see the results of the 150,000 backtests and let me show you how to use our trading script. As I said earlier, I tested the strategy on different assets, timeframes, risk basis and risk to reward ratios. For this backtest, I used the 3 best performing moving average, the SMMA, the EMA and the WMA. Besides that, I added the simple moving average or SMA for short, only for comparison. I tested 3 crypto pairs, the Bitcoin USDT, and to make the backtest more diverse, I also used a relatively smaller crypto, the Algo USDT and the meme coin, the Doge USDT pair. I used 3 risk-to-reward ratios, the 1:1, the 1:2 and the 1:0.5. And finally, 3 risk bases, 1 times ATR, 2 times ATR and 3 times ATR. Now let's do some simple math. This gives us 3 pairs times 2 time frames times 3 risk bases times 4 moving average types. So this brings us to a total of 216 combinations. Besides crypto, I also choose 3 forex pairs, 1 major, 1 minor and 1 exotic pair, and 2 stock market assets, the S&P 500 and the Facebook or Meta. Here you can see all the tested combinations. In total, I tested 576 combinations, which gave us 149,627 trades. You might have guessed, I did not took all these trades manually, that would have taken me weeks. Instead of manual backtesting, I used the premium version of our multi-MA crossover strategy. Let me show you the process. For example purposes, let's say we want to test the Algo USDT pair on the 15-minute time frame with a 1 times ATR base risk and a 1:1 risk-reward ratio, using a 25 length SMA for the fast-moving average and a 50 length SMA for the slow-moving average. First, set your chart to Algo USDT 15-minute time frame. Then, if you are a Smart Trader tier member, add the premium version of the multi-MA crossover strategy to your chart. Once you've done that, go to the settings, set the MA type to SMA and the fast MA length to 25 and the slow MA length to 50. After that, scroll down to the stop loss take profit setup. Here type in 1 for risk and 1 for reward. And with that, you are all set. Now click on the Strategy Tester tab and go to the Performance Summary section. Now scroll down until you find the number of winning trades and number of losing trades. From here I copied those two numbers into my Excel sheet, and from those values it calculated me all the data I was interested in. I did this process on all of the 576 combinations, which took me around 3 hours instead of weeks. And now, let's see the best performing settings and draw the conclusion. Here are the 30 best performing settings. On the top you can see the best one with 39.5% net profit, which was achieved on the S&P 500 on the 1 hour time frame with a 2x ATR risk base and the 1:2 risk to reward ratio, and by using the SMMA. But don't forget, the real reason I made this huge database is to have statistically proven results of the best moving average, the best risk to reward ratio, the best time frame, and the best assets. If you take a look at the MAU section, you can see that the majority of the best performing results, 19 out of 30 to be more specific, was made with the use of the SMMA moving average. So after all these backtests, we can say that the best moving average for this simple moving average crossover strategy is the SMMA or the smoothed moving average. Moving on to the risk to reward ratio, you can see that the 1:2 risk to reward ratio was used mostly, 21 times out of 30 to be more specific. At the time frame section, we can see that the 1 hour time frame was used the most. What I usually say, the higher time frame you use, the more predictable it becomes. The data we see here also confirms this statement. On higher time frames, there are less manipulations and short-term swings that usually hits close stop losses, causing you losing trades. And finally, let's talk about the pairs. In the comment section of one of our videos, I read that the major Euro-USD pair is one of the worst pairs to use for trading, as this is the pair with the biggest volume and mainly traded by banks and big institutions. This usually comes with more manipulations. So that's why I added a minor pair with less trading volume, the odd JPY, and an exotic pair, the USD ZAR, which has even less volume. If we only look at the 30 best performing forex pairs, we can see that only one of those was the Euro-USD. There were 8 odd JPYs and 4 USD ZAR. Seeing these results, we can say that the statement was true. It is better to use smaller forex pairs like the odd JPY or the USD ZAR than the Euro-USD. Collecting such a huge database of results to see statistical edges in the market is necessary if you want to become an objective algorithmic trader. If you want to draw a conclusion of what to use and not to use from this database, I left a Google Drive link where you can open and download this Excel sheet. Today's video took a lot of hours to make, so if you like this video and want to see more content like this, show some love by liking this video and subscribing to our channel. If you want to get access to our Discord channel or premium trading scripts and our strategy optimizations, you know where to do that. Link to our Patreon page is down in the description. And with that said, that wraps up today's video. Thank you all for watching, have an amazing day, and see you in the next video.